Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. This is the chart of silver priced in US dollars. That's the daily scale. Silver in general is stronger than gold. We can see it from the price action, the levels of support that are coming into play. But it is in a correction. Definitely, from what I see on the screen, the price action should be labeled as correction. And I don't think it's over. I think that there is still more decline coming, not necessarily huge decline, but there is more decline coming. And in fact, if we get further decline under this level, let me show you precisely, just get my mouse right here, that's 2168. Basically we want to see it breaking through this low, following a certain sequence that I'll explain to you in a sec. That could qualify as the end of a C inside a big ABC. Okay, in itself, that is long term very bullish. Okay, long term that will be very bullish. I'll show you the bits and pieces as we are looking, as we will look at lower scale. And the idea is that we will work with this being 1. Okay, so the correction here is taken as a correction that relates to all of that. Right now we hit the level under 0.382 and 0.5. If it goes down to 0.5, I don't think it'll go that low, but if it does, nothing terribly unusual. Yes, especially if it corrects all of that, there is really nothing terribly unusual. Okay, let's now start breaking to lower levels and see what we can detect in terms of the patterns that are in play here. Now you see my question marks here. It's very simple. I cannot be sure that this wave count is really the one operating here. I will show you a few alternatives, but if I can put it this way, if Mr. Market will oblige and will give us a lateral movement here, let's say on 2-3 over 2-3 trading days, and then final decline that will go and knock the floor, as I mentioned right here, that will give us a clean 1 2 3 4 5. In that case, what I'm going to do, I'm going to relate all of this to this, you see. And what I'm going to do, I'm going to label all the price action here as an A, B, C, D, E. That will be a big B. All of this will be my big B, and that will be an A, that's a B, and that will be taken as a C. I do not think that silver is ready to crash in this manner. Sorry, in this manner, yeah, I mean to this extent from current level, but I do think that there is scope. And if you like, there is logic in a movement that will take it down under 2150. I could even go to the other side of this channel yes, to 2050 area or so, to give us a move, fifth wave that would be equivalent to what we have seen here. Now, you know that this wave count is not correct, that something else is going on. Should silver, of course, not continue to decline, but will mount a jump above 2350 right here. If silver starts this coming week, new week, it jumps like that, you know this wave count should be discarded. We should not work with this. It's not the right wave count. Something else is going on, obviously, telling us that silver is fairly strong. Yes, it's fairly strong if it doesn't need to come to test this low or to rely on this support. Obviously, it's fairly strong, and subsequent price action will tell us if the pattern is complete. There is no doubt that this is a very complex pattern, and we don't have 5-leg move here. This is pretty clear. You can see, I mean, you start counting from here. Where on earth we are going to find 5 waves here? None. None. We should never try to force a wave count. It's a fool's game, you know. When something is not clear, the best thing is just to say it's not clear. It's not to try to twist and turn things because you want it so much to be a certain pattern. Okay, let's have a look at gold here. That's the quarterly. The problem that I have with taking this as a move that will take it all the way down to 1000, as some very big doom and gloom players are considering, is that I do think that what we have seen here was a fourth wave on the very long-term scale. This is the quarterly, remember. This is the quarterly, and we have two options basically. I think the most likely scenario is that fourth wave ended here. That is my preferred reading. And somehow I don't see that this is the end of the rally, having prepared for so many years for this. I don't see this as the end of the rally. No. So I'm not signing up on taking this as a major top, and gold is going to crash to 1000, etc. I think it is extremely unlikely. That is just one argument. The other argument, which is I think very strong argument, is the fact that the entire price action right from the top is decidedly corrective. It's looking corrective. As I just told you, we are not in the business of pushing a wave count. It looks corrective, accept it as corrective. And the concept and the ramifications of what it means. It's corrective. It's corrective to what? It's corrective to this. That is very simple. Now, that's the quarterly. We're going to go now to the monthly. Now, we do have a dilemma here. It is corrective, fine. Suppose we settle on that, no issue. But what do we do with a run-up from this spot? How do we subdivide it? It is still not impossible to treat this as a 1, 2, and that's 3, and that will be our fourth wave. It's not impossible. The problem that I see here is that in terms of the time scale, that looks like it is chewing up too much time in terms of the proportion to the time that was spent on the second wave. Doesn't mean it's not possible, but it looks to me like the odds are not favoring this. So I wouldn't run with that. So we are basically going in the direction that maybe this is the right wave count. 1, 2, and that should be taken as an entire move side wave, and that's a fourth wave. Whichever way we split and turn this, I think that this is very likely corrective. And I'm going to go now to the weekly. And the idea that this is an ABCD is not that. It's not that. There is obviously a different wave count, and I'm going to show you in a sec. For that, we're going to go to the daily, but I want you to observe that the 50 on the weekly, the 50 moving average, has in the past proved to be a very strong ally, ally of the bulls. You can see that, especially here, and I tend to think that gold will find support in this zone. You have the confluence of several factors that are coming into play here. You have the declining channel, and it's going to the other side of the channel. It's going to meet the 50, and it's going to meet the horizontal resistance support right here. Lots of factors are coming into play here. So I take it that this is going to be a pretty important level to watch. Definitely in our analysis of the long-term trend of gold. Yes, if gold does crash under 1,700 and it gives us several weekly closes around here, that will look very bad. I'll tell you right away. That would look very bad long term. But if it does come down fairly slowly, I would say no panic towards 1,700, and then it begins to gradually go up, that could be actually the bottom of this correction. A correction that has been on since August. So that tells you what is coming. If I'm reading it right and this is a correction, it tells you what is coming, yeah, in terms of an impulse wave. Okay, let's have a look at the daily. And you see here, when it started falling, that I took this, I now label this as an A, O1, B, O2, C, O3. What's the point of the 1, 2, 3? Well, what's the point? Because the AB is no news to you. You already know about this. I discussed it many times. The point is this. If now we see gold basically going sideways for several sessions and holding under 1,820 and then giving us another swing down like that towards 1,700, 1,720, 1,700 zone, that would almost certainly qualify as a 1, 2, 3, 4, 5 move. And that could resemble what we have just discussed in the case of silver. If you remember, we took this as a big A in silver, we took this as a big B in silver, and that could be a big C in gold. That will give us an A. That's an A, B, C, D, E. That's the big B. And 5-wave run down here will give us a big C. And then you find yourself with a long-term wave count for gold and silver that are showing the same thing. And that will be very helpful. One thing that could rattle some believers in the power of the 200 moving average is the fact that gold crossed the 200 moving average. It doesn't look good short term, definitely. Doesn't look good, and it does look like there is further decline coming around the corner. But as I said to you, and I did my best to put the big perspective, yes, to bring it into play here, so that we are aware of the critical levels long term. Right now, as you can see, that's A or B or 2, and then you have the 1, 2, 3, 4, 5. I think it's probably complete. I might have to revise this wave count if it does manage to run above 1,820. It starts the week, it doesn't look down, it looks actually quite buoyant. It goes there to 1,820 and then it continues to rally. Then you have to assume that this is over. Okay, and that's obviously going to be very bullish for gold. Now let's have a look at the chart of GLD. That's the monthly. And it gives you another perspective, and we'll take a look at the very short term as well. And that is the monthly of GLD. The GLD, of course, tracks the price of gold, and this is my idea. You see, I think that we had a fourth wave that went on for many years. 1, 2, 3, 4, 5, 6, 7 years. Yeah, I would say almost full 7 years. And then the rally. So I don't think the rally of 2 years or even less is all what we're going to get after preparation of 7 years. So on the monthly, we have a choice taking this as 1, 2, as you can see, or 1, 2 like that, and assuming that all of this is a one move. Okay, but let's focus on the decline right now. And again, as you can see, we're coming close to the 50 moving average, and we're coming close to the 50 retracement level of the entire move from here. And we have also horizontal support. and you can see the labelings here is taken as A, 108, 2OB, and 3OC. Now, of course, if this is a third wave, which means longer term gold will go down substantially, that's what's going to happen. It's going to come down like that towards 160. Yes, 160 on GLD on the weekly, and it is not going to bounce back. I mean, it must bounce back to 173 and higher. Otherwise, if it does that, that's very bad. That's very bad for the bulls long term. That'll be 1, 2, that's 3, that's 4. It will go down big. Okay, and that's one of the reasons I brought up this chart, because it does flesh out this option quite well. I'm going to go to the daily now, and you can see the idea is that this is a 1, 2, 3, that was a triangle, fourth wave, and that's a 5. So I start counting from here for my 1OA, that's 2OB, and that gives me a 1, 2, and down we go. We are looking for the end of the third sideways price action, as I explained, and the rest will follow the bear, the big bear, unless of course we come back fairly quickly. So that's the chart of GLD. My service currently at 50% off for first-time users. You need to go on my website. The homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you're not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos. Okay, so you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here. Chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you great trading week. Bye now.